I thought the banking crisis was over, and yet here we are. 2008 into 2009, a financial crisis like we hadn't seen since the Great Depression. They told us they fixed everything. They told us they put all the protections in place. And yet what we are seeing here from the FDIC, from the Federal Reserve, and from the Treasury all highlights the conditions we face, and that is they are unfortunately getting worse. If you look at this banking crisis in depth, no, this is an SVB. You're looking at it all wrong. You've got to understand that there's so much more happening, and I'm going to show you all those details that you need to know. You came here for the truth, so let me unveil that for you. Look, first things first, you could see that this information highlights that simple fact. Despite decisive actions by the Federal Reserve, FDIC, and the Treasury, concern about the economic outlook, credit quality, and funding liquidity could lead banks and other financial institutions to further contract the supply of credit to the economy. A sharp contraction in the availability of credit would drive up the cost of funding for businesses and households, potentially resulting in a slowdown in economic activity. Not potentially, it will. You see, what we face in this current system is a simple matter of fact. Debt is money, credit is money. These things operate all throughout the system behind the scenes. You and I may not know about it. We have our homes, we have our vehicles, we do our work, and that's the end of that. But in the financial system, there's a lot more happening. And as soon as credit, not only does it not need to contract, but if it doesn't expand, immediately you have a problem. And then depending on many factors, and is there a domino effect, a shock wave, these different things will determine, is that going to be a small thing or is that going to be massive? And that's what we're experiencing right now. We're at that tipping point, and I'm going to show you those details. Look further into this. The worst isn't over for the US stock market, according to JPMorgan's head quant, Kolanovic. And you see right here, slow move to defensive implies recession risk is not yet priced in. Impact of tightening to be felt more strongly due to the bank woes. You could look at the charts that they give you here and everything, but essentially, this is one guy. You got to realize who this is. This is one guy who was constantly, every single month, coming out with his report saying, buy the dip, buy more, add to your positions. Now he has flipped to the opposite direction. And he's been on this, by the way, for several months, so he's not exactly correct at this point, because the market, where I had told you back in September, I told you October would likely look like at least a near-term bottom in the stock market, he actually flipped and said, no, it's going to get worse. But now what we are seeing is the bank crisis. Now that's something that nobody really anticipated and said, okay, we're going to have a bank crisis. You're going to have regional banks start failing and pull down. Nobody really realized that, but we knew that there would be problems, that there would be credit dysfunction, and we're getting that. That's happening right now today. And so what does that mean to you? What can we do about it? I'll discuss that in a few minutes. I want to show you what else has been happening. According to none other than the Federal Reserve Bank of Chicago President Austin Goolsbee warned on Monday that a credit tightening is underway and recession is a possibility. This is not me, even though I do agree the potential of that. This is not some small time analyst, some YouTuber out there. No, I'm quoting people directly from the Federal Reserve. The credit crunch, or at least the credit squeeze, is beginning. That's a quote. I think you have to say the recession is a possibility. You do not land the plane nose down. So while we were told about soft landing, transitory, all that nonsense, look at where we are at today. We better position ourselves much better than what the average person is, the average 401k, the average nonsense, because this has all been lined up in such a way that, my goodness, it is worrisome, okay? All right, my friend Janet Yellen warns of a constitutional crisis as the U.S. debt ceiling deadline approaches. Oh, that's right. They want to take care of this. What are they going to do? They give some quotes in here. Failing to raise the debt ceiling would be the first time in the history of America that we would fail to make payments that are due. We would simply not have enough cash to meet all of our obligations. And it's widely agreed that financial and economic chaos would ensue. That's what she's saying. And of course, she can say whatever she wants. We know what's going to happen here. They are going to push for it. They're going to do some temporary measure, whether it's going to come directly from the president, or maybe it's going to be just the Congress getting together and saying, okay, let's do this thing temporarily and let's make this happen. It doesn't matter. They are going to expand war. They are going to expand the surveillance state. They're going to do these things. And where are they going to get that money from? It comes from the Congress. Okay, let's not pretend. Okay, we don't do that on this channel. We don't pretend. We just want the truth. U.S. banks pull back on loans as Fed hikes rattle the financial sector. Lenders are fretting about liquidity. In the first survey since Silicon Valley Bank failed, and this comes, part of the same information, that we are seeing those pull back on the loans. It's not what it once was, okay? They're concerned, and for good reason. You could see percentage of U.S. banks that are tightening commercial loan standards for mid to large firms. I'm not talking about you and your neighbor buying a house down the street. I'm talking about this on a wider scale, commercial loan standards. And you could see that that has increased to the levels, almost get in there, to the levels we saw back in 2020 when nobody knew what the heck was going on. Not quite there to the financial crisis, but certainly climbing higher. The Federal Reserve has increased interest rates. This has created this effect of wonderment, I guess. What do you mean? The Fed can increase interest rates? No. They won't do it. They're going to reverse. This whole time, every increase, they said they're going to reverse. Here we are. 2023, they've been doing it 10 times in a row. They increased interest rates. Now, I do believe at some point they're going to cut interest rates. Everybody knows that, it's a cycle. But they haven't done that yet. And as they do this, the longer it goes on for them, problems are building up. So I'm interested to see what happens. I know you are as well. Fed flags concerns over credit tightening and financial stress. This is all part of the same thing as the financial stability report. And commercial real estate being the big one, okay? Tightening, that's for sure. But also look at all of these different, locations, whether it's retail, whether that is something like office real estate, where clearly there isn't as much need. And yes, that could be filled at some point, but how long is that gap going to be? Is it a year? Okay, maybe they can weather the storm. Is it 10 years? Then we've got a problem. Yeah, they can maybe take some of these towers and they could rezone them and become residential, but who wants to take on that right now? Not a lot of companies. They have to use debt to do that. And of course, when they do this, it's going to really, take a lot, because the expense here is the challenge. It's just way too expensive. Economy talk, let's get into it. We're going to look at this, and for a lot of people, they don't realize how weak some sectors of the economy have been. Attaining the American dream is becoming more challenging than ever, according to a millennial housing survey. And of course, inflation has picked up, and you look at that, rents have risen significantly. For example, I believe it was Toronto's stats that I was looking at. The rent increased over 11% year over year. Is that 2%? Is it 3%? What's inflation at right now? What they say, 5%, 6%? But yet the rent year over year was like something like almost 12%. Are you kidding me? I mean, they're never going to show you what the real rate is. And what's the most important thing? Food, shelter, energy. What are the things that they love to either completely remove from the stats or squash down using these different ways and different techniques? Food, shelter, and energy. Are you surprised? Come on. We have to be smarter about this, okay? Let's put all this stuff aside. Let's forget about what the actual rate is. We're going to spend hours and hours and hours. I'm going to look at John Williams statistics. I'm going to look at, all of these things. I'm going to spend 10 hours looking at all of that so that I can know exactly what it is. Let's just realize it's just not true. The number they give us, it's not true. And instead, we're going to use that time in order to make our situation as best we can. We're going to look at our portfolio, our 401ks, our RRSPs, our supers. We're going to see what our retirement accounts look like, our portfolio, and so on. Okay, what's the situation we are in? Not so good. If that's the case, okay, let's get serious right now. Let's be honest with ourselves. We want to go into more a defensive mode here at this time. That doesn't mean that we sell everything, throw it under the mattress. That means we take the action today in order to switch around certain things. Maybe we don't want the highest risk stocks in our portfolio, and instead what we want to do are having those staples, those things that people, they're still going to buy. You got to realize this, even if there's a depression, people are still going to buy stuff. They're still going to buy stuff. They're going to need certain things. Maybe they're going to buy canning equipment versus the latest iPhone. And that should be a warning to you that, yeah, they're going to do this. The businesses that you can be serving, the people, the customers, whether you're going B2B or B2C, you got to realize that. What are people, customers, are actively seeking? Are they looking for, the latest hot trend? Or maybe now they're getting a little bit more conservative and they're maybe eating at home, and maybe they're doing preserving, and maybe they're doing storing stuff. I always give the example, if you want to sell online, you got to look at those things that don't have peaks and valleys. You got to get into something, don't do this product, Tupperware. Tupperware is going to do good in good times and it's going to do good in bad times because people want to save money, and that's just a storable thing for people that they can put it away, and when they need it, they take it out. That's the kind of thing that we need to be realizing over these times. People will still be buying stuff, and we want to use our intelligence to realize, okay, peaks and valleys we want to avoid, and we want to get into something, whether that's a stock I'm investing in or whether that's a business that I'm going to start. I want to make sure that it doesn't have those highs and lows, at least, significantly, because we don't want that to happen to ourselves. Intel plans fresh round of layoffs. LinkedIn cuts over 700 jobs. We can see all this, right? This is happening right before our very eyes today. And that's why we need to take action on all of this. Very important stuff to simply ask the question, what should I do? And it really depends on you. As I just discussed a minute ago, these are some of the things, but you need to look at your situation and write that down. You need to make that clear. Make it very clear to yourself what you intend on doing. Are you going to sit there? You're just going to wait for this all to be fixed up? You're going to keep your Tesla stock and you're going to say, I'm riding that thing to the moon, baby. That's okay. That's what you're going to do. You make that decision for yourself. But you've got to look at it and be serious and be honest with yourself. So you decide. You can put that down below to kind of be like, this is what I'm going to do, and put that out into the universe. Put that down in the description below. Or is it maybe you're going to decide for yourself and say, you know what? I'm going to go off grid. That's what I'm going to do. Depends on you. It really does depend on you, your circumstances, your family situation. It all depends on you. I hope you appreciate this information. You've got to look at this channel every day. Come on the channel and make sure to hit that like button so I can bring you the latest and greatest info. I'll see you then. Take care.